Thank you, everyone, for being here today. And Erin gave a great talk. I love to see another female mathematician. And this talk's called Making a Six-Figure Income with SunnyBands. So I'm going to be talking about my flagship indicator, SunnyBands, and a couple other indicators that are adjunct to that. And we'll see how I make money in the markets. So my passion is in helping beginners and intermediate traders. So this talk is for you if you have not yet become wildly successful, if you've not traded much and want to learn, or if you want to improve your trading results. I love to teach, mentor, and consult. It's the highlight of my day to be able to help people make money. So here's my cell phone number. It's 760-908-3070. David, could you put that in the chat, please? So if you call me, I'm the one that picks up. This is my personal phone. And if you text me guest, Guest, I'll give you a guest pass to my live trading room. And always remember that trading is a dangerous occupation. You can lose more than you can win. And 90% or more of people lose instead of winning. Past performance is not a predictor of future results. All investing involves risk of loss. And your capital is at risk whenever you invest, and you can lose some or all. And please never risk more than you can afford to lose. So I'm going to tell you a little bit about myself, and then I'm going to show you how I trade every day using my own proprietary indicators, SunnyBands, dynamic moving average histogram, and PHW and slope. I don't hold anything back. I tell you everything that I do. Some people will give you a nice waving of the hands and not really explain it to you, but I tell you everything I do. So here we go. I've been a professional trader for 44 years. I trade futures, stocks, and crypto. I don't trade options. And I'm going to tell you a little about my history and show you how I trade. So I've been trading since 1981 through the 41% crash of 87, the 38% crash of 2000, the 52% crash of 2007, 2008, as well as the 38% COVID crash. You see something here? 41, 38, 52, 38. These are crashes with big moves in them, and I expect we're going to get another one. I trade the S&P 500 futures contract. If you don't know what that is, it's very, very much like trading stocks, except that it's easy to go short. So when you expect the market's going up, you go long, and when you expect the market's going down, you go short. So you can profit from both directions. I use 1 minute and 5 minute charts for my trading. The ES is said to be one of the more difficult markets to trade, but I don't find it that way at all. I've been doing it for 44 years. I do have long-term stock holdings. And long-term to me, since I trade 5 minute charts, long-term's a week or more. And a little bit of cryptocurrencies. So today I'm going to show you how I trade SunnyBands, my dynamic moving averages for the greatest income. And if we have time at the end, I'll show you my compounding spreadsheet, Ultimate F. I also have a podcast that I feature the legends in the trading industry. And if you go to moneymentor.com, moneymentor.com is my website. If you go to podcast.html, you can see everybody I've interviewed so far. I think there are 52 of them now. Larry Williams, Jake Bernstein, Steve Nissen, Linda Raschke, Alexander Elder, Cynthia Case, Sherman McClellan, Carolyn Borodin, Greg Morris, John Bollinger, and the list goes on and on. You recognize all these names. So it looks like I've got, 52 or 54 in there. This is my website, moneymentor.com, and my tagline is education is not expensive, but lack of education is. I was rated #1 trader twice in near the beginning of my trading career, actually. You can see the pink line across the top, number one. And I was at that time, I was using SunnyBands in my dynamic moving average. I created them 38 years ago, and I've used them ever since, and I have never changed the mathematics. I do a daily live trading room by subscription at 7:30 a.m. every trading day for 1 hour. Last year, we were up 482% in just 1 hour a day, and we're up 37% so far for 2025. I grew up dirt poor in Appalachia, um, and now I have 3 degrees in mathematics and 1 degree in telecommunications after I retired because I love to go to school. And I've done business and programming classes at Stanford and Wharton and UCLA and lots more. I've been programming for 56 years, 44 years live trading. I was initially a systems programmer for Lockheed, and then I left there to found a little company called ISCO. There were 3 of us, and I retired when I was 30. We got up to 105 employees, and I thought, well, that's enough. I got more money than I can ever spend, so I'm going to do something else. So, like a smart non-trading person, I gave my millions to money managers, and in 3 weeks they lost $75,000. So I thought I can do that poorly on my own. So I took the money back and started learning to trade. And I've read 747 books so far on trading and economy and investing and things like that. But I did not enter a single trade for the first year of watching the market. Now, back then, we didn't have computers and we didn't have computers that did charting. So it was all by hand on graph paper. And I used to take Investors Business Daily every morning, go down to Denny's and have breakfast and plot all these charts for things that I watched. And then I also published a monthly magazine for 8 years called Trader's Catalog and Resource Guide. It was half articles and half yellow pages. Of course, now we've got the internet. We don't even need yellow pages anymore. I've written 6 best-selling trading books: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy. And then I took a little aside and did a book called Going Vegan with my friend Linda Blair. I also, with Murray Ruggiero, wrote Using Easy Language 9.x. And then last year, I finished with my friend Sam Tennis, the definitive guide to TradeStation's easy language and OOEL programming. Now, that was a work. I thought I wrote a big book when I did TradeStation Made Easy. It was 746 pages, but the definitive guide is over 1,300 pages, and it's in 2 volumes. And I've, of course, written articles for all the major magazines. I'll just run through them there quickly. Here's the covers of my books, just so you can get familiar with them. And there's Going Vegan, and here are the 2 new books. Oh, and I've also been rated in the top 10 consultants and top 10 courses and seminars by Stocks and Commodities Magazine, and #1 trader by Stark Research. And I belong to all the important organizations. On my website, there's a little area where you can click on quips, and you can, I get emails at random from people that I've worked with. I get accolades and criticisms both, and I post them all. So if you just click on quips, you can see what people have said about me. And here's one that was really amazing. This guy, and I haven't talked to him since, but he said, well, I just want to say I love them, your SunnyBands, your bands. I've torn apart Bollinger Bands, Keltner, etc., and nothing comes close to what you have created. I've talked to CMTs, that's chartered market technicians, who've said, oh yeah, they're just bullies, and I almost spit out my coffee. I've watched your videos where you were walking a new customer through their use, and I got it, understood. The turns are right there. Bullies are too general, and Kellner, which Rasky says she likes, are only a hair better than Bullies. Yours blows them both away. Of course, you already know that. And I just thought that was really cool. Somebody really got it. And I have a Facebook page. I do post predictions there from time to time. So just go to Facebook and look up Sunny Harris. You'll find me. And you can also view the PDF of this presentation by going to moneymentor.com and looking up appearances. And I list each of the appearances I've been in and the recording of the session and the PDF of the slides. I have clients all over the world, so don't be afraid to call me. I answer my phone at all hours, so give me a call. I got a new client today in Saudi Arabia. That's my first one. I think of that. Now we're going to talk about what's the most important part of this whole talk to me, and that's making a six-figure income. These are probably the most important slides in the whole presentation. If you want to get somewhere, you need a guide, you need a map, you need a recipe, and it comes with planning how to make your fortune. So do this with your own goals in mind. Without a goal and a plan, you won't get to your destination. So a six-figure income, let's take this example because it divides real nicely. $120,000 a year. Now, who wouldn't want to make that trading? It's a good goal. If you divide that by 12 months, you get $10,000 a month. If you divide $10,000 a month by the trading day, 20 trading days, you get $500 a day. Now, that seems much more doable than just setting a goal of I want to make $120,000 a year. $500 a day is an achievable goal. And it's only 5 trades at $100 each. So you can make that by scalping. There's usually between $1,000 and $3,500 per day potential in the S&P, going both long and short, just one contract. Then do what it takes. If it takes sitting and looking at the computer, do that. I have so many people that call me and say, I really want to make a six-figure income, but I don't want to sit in front of the computer all day. Well, they're not willing to do what it takes. So you might be able to do that in an hour a day, like I do in my live trading room. And you might need to do it the whole day. Do whatever it takes. You need to stay up late or get up early. Now, I get up at 4:30 every morning, and I'm a night person. I don't like getting up early, but the market opens at 6:30 California time, so I get up. And I sit and watch the monitor, but I stay away from news. I read my charts and stay away from the news. You must dance. I call it dancing with the market. So whatever your SunnyBands tells you, you just do that little dance and repeat it. Sometimes there are only 3 moves in the market. Sometimes only 1. So don't try to take something that's not there. You can't make the market do anything. So keep a chart / goal of your income. So what is the goal for your income? If it's $120,000 a year, put on a piece of graph paper or in Excel, put your 120,000 and draw a line from 0 up to 120,000 over 365 days and plot it. Plot it every day so you know exactly where you are on the chart. Focus on the present, though. That's so important to be focusing on the present. You can't think about the bad trade that you had this morning or yesterday or last week. You have to think on the present. So you dance with the market and you have to create a strategy or a plan. So you also have to test your strategy. If you create a strategy and don't know how it performs in the market, that's no good. So you have to have a plan and you have to test it by hand or by using code. And I use TradeStation. It's one of the easiest programs to use. It's also one of the most professional. And the coding language is extremely easy. And by the way, it's called Easy Language. So prove your strategy. So you have to test it, and then you have to prove it. You need to know that it works. You need to know what your statistics are, so you know what numbers you're looking at. And if you don't know how to do this, give me a call, 760-908-3070, and I'll teach you how to do it. So last year we made 482%. We had $60,000 by year end in 1 hour a day. And here you can see what a real trader equity curve looks like. You can see this. Sometimes I lost, sometimes I won. But you see the line that goes from 0 all the way up to what my goal was? I stayed pretty much with that line, didn't I? So I'm going to break it all down and show you exactly how I trade. And I'm going to show you some basic images of charts, and then I'm going to show you the charts with my SunnyBands on them. So the images with the bands will look complex, but they really are not. It's really a simple set of rules. There's only 3 rules. And color coding keys me into action with everything. My 1 minute chart has a yellow background. My 5 minute chart has a green background. I always know what I'm looking at based on the color of the background. And the gold and purple in the DMA are also very important. So this is a chart of the SPY, and you can see up and down, up and down, up and down. But how do you know that this is the end of this down movement? What about this movement? Is this the end of that down movement? What about this one? Was that the end? You never know until it's over. And we always trade on the hard right edge of the chart. So you have to learn what the patterns that Aaron was talking about are extremely important. So you have to learn those patterns. And my best recommendation for a book to read, first one I read, and I read it 3 times. In fact, I have 3 copies of it, is called Technical Analysis of the Futures Market by John Murphy. First one I bought, and I studied and studied the book, and I highlighted almost the whole thing. It was so important. So I bought another one so I could start highlighting and be a little more judicious with my yellow. And I studied that one. And then I went to a seminar where John Murphy was talking, and I had lunch with him one day. And I ran out to the little bookstore and bought another one so I could have him autograph it for me. So I have 3 copies of that book. This is the same symbol, SPY, but you can see this is a 15-minute chart, I think. And you can see that I said color coding keys me into things. So I use red and blue bars for the day session and green and magenta bars for the night session. So I can tell immediately just by glancing what session I'm in. I don't have to look down at the bottom of the chart and read the data. Here's the same thing on a 5-minute chart. You can see they're different. And I do trade the 5-minute charts. Where's this? This is a 1-minute chart of the SPY. Where's this chart going? Okay, I've got it covered up by a yellow sticky. And there it goes, both up and down and then up again. And that's the thing that I saw a little cartoon once that said it had people on a roller coaster, and it looked like a chart of the market. And they said the market goes up, the market goes down, you throw up. No such thing as prescience with the markets. We all look at the hard right edge of the forming chart. We don't have future data, we have past data. That's all we have to go on. And we don't know where the market is going. We can speculate, but it's just a guess. There's no future predicting indicators. So what I do is I ask the question, what is true, all the time? So you look at a chart with every new bar and ask what is true. Do we have a head and shoulders? Do we have a triple top? Do we have a pennant formation or a flag formation? So you're always asking what is true. And I haven't stopped asking that question after 44 years. So it's easier to see in hindsight that the chart doesn't tell you much. In fact, it pretty much looks just scary. Is it going down further? Is it at the bottom, or is it going to turn around? What's high and what's low? They tell you buy low, sell high. Most traders I find buy high and sell low. So when do you enter? Well, I'll show you a couple of tools I use. These are Fibonacci lines that I've drawn in this move from this point, no, from this point to this point. So I drew Fibonacci lines. And if you don't know what Fibonacci means, give me a call. I'll be happy to explain it to you. So you can see that it comes down, it touches that blue line, touches this blue line. Here it plows through and touches this one, goes back up to that one. Now, this is all drawn beforehand, but you can see that it keeps touching these values. See it over and over again, it keeps touching those values. So those are good targets. And then I add something I call attractors. Attractors is the group of indicators or drawing tools that includes Fibonacci, but you can see it also includes trend lines. So I've got a set of trend lines here, and those are attractors as well. They attract price to them. Here's another attractor. This is a simple moving average. That's an attractor too, because price reverts to the mean. You can see it comes back and forth across this line over and over again. In my live trading room, we also look at the 1-minute NASDAQ chart with a 21 moving average on it, a 55, and a 200. And price plays with that moving average over and over again all day. Those moving averages, sorry. Let's put on some of my indicators now. We're going to put SunnyBands and the DMA histogram on, and another one I call slope, and PHW. So here's SunnyBands, and you can see how this contains price movement over and over again, contains price movement. As it comes down, we go long. When it comes up, we go short. And it's basically as simple as that. Here's the histogram, which shows a zero line through the middle. Gold lines on top mean that the gold line of my DMA, dynamic moving average, which is right here in the center of this channel, that DMA has gold on top. Over here, it has purple on top. So when purple's on top, the lines are below the zero line. When gold is on top, they're above the zero line. Red means we're losing momentum. And on the short side, green means we're losing momentum. So you can see gold means gold's on top, purple means purple's on top. And that's my main signal. Here I also have a chart with slope on it. And I can see that, you see the yellow dots across this level? That's at the zero line. And when the slope is zero, that means that the DMA is flat, because this is the slope of the DMA. So when the DMA is flat, I don't expect price to move much beyond the flat DMA. Every time it turns flat on me, I use a lot of caution in my trading. I call it danger, danger. So now I can see something. I added attractors, which are not just support and resistance. Trend lines are attractors. Moving averages are attractors. Fibonacci retracements are attractors. It's the general category of drawing tools that it's kind of like reversion to the mean, but it's not really. So Elliott waves are also attractors. Price tends to go there. Anything that attracts price, I call an attractor. So let's go a little more. PHW is the yellow dots that you'll see on my charts. And PHW stands for potential hourly wage. I wanted to know when I first got started trading, I wanted to know how much money's on that chart. It doesn't make any sense to trade a chart that has no money on it. So I created this little indicator that gives me exactly how much money is available on that chart. And is it more than working for an hourly wage? If you can't make more than $25 an hour by trading, you shouldn't be trading. The dots are at the ideal turning points, but of course I can't be perfect, so they're not all exact, but I take 60% of the ideal as my goal. So if a chart has $3,000 on it, I take 60% of that as my goal. And here's what they look like. You see the yellow dots? Here, 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 here. And there's a number beside each yellow dot that tells you the price level at that yellow dot. Then out at the end on the right, you'll see it says ideal equals PHW equals ideal number of trades in the date span. So if I could, this isn't a live chart, but if I could pull it over, you'd be able to see there. I've enlarged it so you can see. It's 558 points on this chart. 60% is 332, sorry. Ideal number of trades is 181, and it gives you the date span. So you know that that's just about 2 weeks. So let's look at some of this analytically, which is the way I like to use everything. I'm going to have some coffee. Hang on. So on this chart of the Dow Jones, if you buy at the beginning in 2020 and sell at the end, that's buy and hold, and that's $34,000. 60% of the ideal on that chart is 327,000. So it's a tenfold difference in trading versus buy and hold. So that's why I'm a trader. There's only one reason to trade, folks, and that's to make money. If you're trading for the excitement or the thrill or the challenge, you're probably going to lose money because you need to plan it like I'm showing you here. And I teach my indicators for free and show you how I trade in my live trading room on Wednesdays. I allow a free guest pass on Wednesdays. So if you just text me guest pass, now I only allow 20 people into the room. So if you want to go ahead and text me now, numbers at the bottom of every slide, 760-908-3070. Text me guest pass and I'll let you into a Wednesday trading room for free. Like all traders, sometimes I win, sometimes I lose, and that's just the way it is. You'll see me lose just as often as you'll see me win. No, that's not true. You'll see me win more often than you see me lose, but there are losing sessions. It happens. I'm going to show you a real quick little condensation video so you can see what my live trading room looks like. Here's the disclaimer and my theme song, You're in the Money. There's my information. Trade along with Sunny. And with the flat DMA with gold on top, I don't really expect it to go much lower than the DMA. If it goes down and closes under the DMA, then I'm short. Next 1 minute Nasdaq's just going straight up. Look, there it's trying. Let's see what this one's doing. Come on. Order filled. Okay. What I'm watching right now is to see if it's going to go above this inner band. And if it does, it seems to me like it's going to be going further up. Order filled. There we go. Good job. Thank you. That was a perfect exit on that trade, wasn't it? Sure was. Yeah. Yeah, it was. I've taken 2 of them, Sonny. Have you? Did you make any money? Yeah. Excellent. Yeah, absolutely. So there you go. That's what a live trading room looks like. Let's look at NVIDIA for that snappy little song. That's my Money Mentor song. You're in the Money is a song from the Depression age when everybody was trying to think positively about the fact that they were in a depression. And one of my students was a composer, and he composed that for me with that snappy rhythm because he said, this is like you. So here it is. And I've been using it ever since. Now this is NVIDIA. And yes, this is a daily chart. And you can see buy signal, sell signal, buy signal, sell signal over and over again. So let's look a bit buy and hold versus trading on NVIDIA. On that chart, there was $923 buy and hold versus 4,400 trading. So that's like, what is that? 4 times as much. Trading one share on a daily chart. Now we're going to look at Tesla. Same idea. We're going to look at the daily chart. I trade stocks on a daily chart and futures on a 5-minute chart. So the buy and hold for Tesla on that chart was $237 per share. Trading was 2,000. So with 100 shares, you'd make 213,000. So that's why I'm a trader. Same idea again on the S&P 500. Now I'm getting some guest pass texts. So be sure to sign up, because when the 20 slots are gone, nobody else gets to sign up. And I'll walk you through this in a live trading session. This is the E-mini S&P 500, and you can see the SunnyBands and the dynamic moving average on that. And I've got the histogram. These are the two main things that I trade with, these two indicators. I wanted to see if I could get rid of congestion failure. So when you're in congestion, like when the DMA is flat here, you're probably going to lose money. And I found that with moving averages, you'd lose that money over and over again. You make money in the trends, and then you give it all back during the congestion. I know some of you have had that experience. So I wanted to do something that was different from the standard moving averages. And I created this special moving average called my DMA. And the difference between it and everything else is it doesn't experience much congestion at all. Of course, from time to time, there's some, but the mathematics of this was developed 38. Well, I started programming it 40 years ago, finished it 38 years ago, and it avoids most whipsaw. And the way it does it is it, instead of standard moving average, will have links 9 and 18 as the default inputs. And with those, you're stuck with two static numbers. But mine recalculates itself automatically, internal to the mathematics. And I've never changed that math over this 38 years. It's all exactly the same way it was back then. And I've been trading with it ever since. So buy and hold on that S&P chart was $418. Trading was 4,800 per share, per contract it would be. We look at 60% of the ideal, that's 29.23 for one share, one contract over 20 years. On the 15-minute chart, same idea, same SunnyBands. SunnyBands works on any symbol and any time frame. Buy and hold on that one on the 15-minute was $75. Trading was $1,500 per share. 60% of that is $910 versus 75. And this one was over a 9-month period, because you don't get as much data on a 15-minute chart as you do on a daily chart. I've got some more guest passes coming in. I'm going to cut it off pretty soon. This is an investor's chart of the SPY on a yearly basis. Now, I like to look at the yearly chart to give me a real clear idea of where the market is and where it could potentially go. And I'm thinking now that this could come down at least at this level here, where we've got a triple top, and probably down to the DMA, which is at the bottom of these three candles. So I think we've got a little more in store here. There's the .com crash. You can see, I mean, it was horrible when it was happening, but you can see there, we've just gone on up, and then we have a COVID crash, which was also horrible. And then we pulled back up out of that. So they happen. They're not real frequent, but they do happen, and you have to be prepared to trade short during that time. Here's the ES on a daily chart with the yellow dots, and you see it gives you the values. And the way these numbers out at the right-hand edge are calculated is it takes this low dot as an ideal buy point, and this yellow dot up here as an ideal sell point, and then it subtracts this number from this number, and that's the potential profit. So potential hourly wage, PHW. On the 15-minute chart, there again are the yellow dots with the numbers. You can see exactly what your opportunity is. Now I like to scalp, and this is a 5-minute chart, which is what I use. You see how many more yellow dots we get. And you can also see, because of yet green and magenta bar candles, you can see that this is the night session. And then the blue and red is the day session. And that's pretty violent. That's really difficult to trade, but that's what I do every day. Swing trader looks at a daily chart and picks off the buys and sells. And here they are: sell, buy, sell, buy, and sell and buy. So those are the ideal places to make these trades. So that's for a swing trader on a daily chart. Now it means long periods of holding. That's what I don't like. I like fast results. So as I said, my indicators work on any symbol, on any time frame. Yes, 5 minutes, yes, 15, yes, daily, etc. Any time frame. And yes, crypto, yes, stocks, yes, futures. I say it works on any chart in any time frame. And people will call me up and say, well, will it work on Apple? Will it work on Amazon? I mean, yes, anything. So how do you know that in 1982 you should have bought Apple at, I don't know what if it was, 12 cents or something, and hold it for 40 years? Well, I look at my indicators, SunnyBands, DMAH, and my PHW indicators to know when to buy and when to sell. So the SunnyBands indicator is an offshoot of my DMA indicator. And this one was designed to allow me to investigate the excursions from the DMA, both favorable and adverse. The bands are average true ranges away from the DMA. And because the DMA is dynamic, meaning it's calculating its own input values, then the average true ranges are also dynamic because they're going off a dynamic moving average. They're not like Bollinger Bands. In Bollinger Bands, he uses standard deviation away from a simple moving average, and standard deviations tell the market where it should go, probability and statistics where it should go. And the simple moving average is the one with the most whipsaw. My dynamic moving average is smooth and it dances seamlessly with the markets. And again, I use ATRs, which ask the market where it has been and is going. Here we have a simple moving average on a daily chart. That's the green line. Simple moving average on a 15. And you can see, I mean, if one of the first things I tested when I was learning to trade was put a simple moving average on something and go short if it goes below that average, go long if it goes above that average. Sometimes that works, sometimes not so well, but when you test it, it doesn't come out as a nice positive outcome. Here's a simple moving average on Apple daily. SMAs on, this is on Metastock. So my indicators work on TradeStation, multi-charts, Metastock, and NinjaTrader, just if you're interested. No, I don't have anything for TradingView because TradingView's programming language is not sophisticated enough to handle the mathematics. Maybe one of these days they'll make that change. And this is two moving averages, and you can see the moving average crossovers are at each of these arrows. And here's the arrow to go short. There's the crossover of the moving average. And down here is where you get in to go short. So that you can see that's not so good. You miss most of the move. And there's the move to go long. Here's the crossover. And there's the bar that you would get in on. So these, I told you to test and then prove your system. These don't work out so well. Before you know that you have to wait for the crossover and then wait for the next bar that formed the crossover, you can see that they're late. Late signals and whipsaw, that's the problem. Whipsaw means a price or indicators moving back and forth with no trend. And you lose money on both sides of the price swing. So that last chart was full of whipsaw. So let's look at the crossover signals a minute. Whipsaw, in my experience, eats up all the profit you made from the trends. crossovers are late, and it's a very lagging indicator. And I set out to cure a whipsaw. I've got 3 degrees in mathematics. I figured I should be able to handle it. And I wanted the links of the moving averages to change with the market automatically. So first I started programming using tables and then arrays, and I found out that that's also static. So I developed the mathematics that took me solid 18 months of 18-hour days to develop that mathematics. But I did it. I created the DMA that calculates its own lengths. The standard moving average will give you input values of 9 for the short term and 18 for the long term length. And mine changes with every tick of the market. So you'll never see 9 and 18 in SunnyBands. And it dances with the market. It's very smooth and elegant. There you have both a simple moving average and my moving average on a chart. And you can see they're close, but they're not exact. And the fact is that the DMA works and the simple moving average does not. Let's look at it closer. You can see the purple line on top here and the gold line on the bottom in this bearish scenario. And then you see on the left, we've got the gold line on top and the purple on the bottom, and that's bullish. My dynamic moving average is unique. One, it's unlike anybody else's moving average. Now, I have seen in Stocks and Commodities magazine, I've seen the last 3 issues have treatises on dynamic, or I think they call them adaptive moving averages, where they've got signal lengths and half the cycle and stuff like that. In particular, John Ehlers is trying to duplicate it, but so far he hasn't come close. So my DMA calculates its own lengths dynamically within the math. And the market moves about as much as it usually moves, which led me to using the ATRs to measure how much it usually moves. Others have tried, but none comes close. Now, here are the basic rules. There's 3 sets of rules: level 1, level 2, and level 3. Let me see how I'm doing on guest passes here. Yeah, I'm getting full. So if you want a guest pass, text it to 760-908-3070 before I close the entries. So when the market's going up, and on my charts, those are blue candles, and gets above the upper outer sunny band, because there are 4 bands: upper outer, upper inner, lower outer, and lower inner. So when it gets up above the upper outer band and turns red and dips below, I go short. When the market's going down, that's red candles, and gets below the lower outer band and turns blue and pops up, I go long. That's the most simple explanation of the whole thing. There are some more complex rules too, and I'm going to go into them next. So in the same amount of time, an investor in buy and hold would have made $168 per share. The trader made $299 per share. And the day trader would make $610 per share. If you'd started with 100 shares, investor made 16 grand, trader made 29 grand, and a day trader made 61 grand. Now that's why trading's worth it. Of course, these are all hypothetical results. They're just calculations. At the starting value of, I think this is correct. I think it's 47 cents in 1981, at the current price of 156 in Apple. The investor made 399%, which is nothing to sneeze at. That's a really good result. But the trader made 635%, and the day trader made 1,200%, actually almost 1,300%. So I am both a trader and an investor. I'm a trader of the S&P 500 and an investor of stocks. And by the way, I'm completely out of the market and have been for over 3 weeks. I closed all my stock trades, and now I'm only trading the E-mini. And I'll let you know when I think it's time to get back in. So is it possible? Yes and no. You can't catch all of the ideal moves. You're only going to get some of them. And according to my research, you can get about 60% of each move. And that means you're leaving 20% on the table when you get in, and you leave 20% on the table when you get out. So you get 60% of each move. And at the same time that you're sitting out of the markets and the market's crashing, investors have to sit through those long periods of scary negative returns while the trader can go short. So this is a little 4-page summary of the rules that I follow. I just explained the first ones to you. This is for educational purposes only. So level 1, I go long when red candles have been moving downward and touch the lower outer band and turn blue, move back inside the lower outer band if price confirms. Now, what do I mean by that? I like to buy when the market's going up and sell when the market's going down. I don't like to try to pick bottoms or tops, either one. So if you're expecting price to go up and it crosses back inside the lower outer band, then if price goes up on the next bar, that's confirmation. So that's what it looks like. So we've got preceding bars were red coming down, they turned blue, it confirms, we go long. And this is one of the rules. See this, how flat this is? I'm going to address that in level 2. So when the DMA is flat, we have one more rule we have to look at. So we hold on, and right there is where we sell on this next red candle. I enter short when blue candles have been moving upward and touch the upper outer band, and then turn red and move back inside the upper outer band again if price confirms. So we've got blue candles going up, turns red, comes below the upper inner band, and we go short. And see, with a moving average, you would have to wait until it got to the DMA. And that by that time, you've given away a lot of your profit. Basic rules is level 2. Excuse me, I'm going to have another sip of coffee. All right, if the DMA midline is flat, that is that the angle is visually sideways, I don't, quote, expect price to move very far beyond the midline. Certainly not initially. You can see here's a flat DMA, purple and gold. There's a little black line in the center that is the average of the purple and gold. That's what I call the midline. So generally, that's a stumbling block. Price comes up, it touches the DMA and drops back down, comes up again, touches the DMA again, and drops down. That's what I mean by danger, danger. And that's where I scalp. When it's touching the midline, that's a good time to take profit and wait for the next signal, because it often acts as a barrier to further movement. Level 3, this is the last set of rules, and it's on 2 pages. So if gold is on top and we have a positive slope, stay long until the gold is penetrated. You see how here we have a buy signal, and we stay with it, stay with it, stay with it, stay with it. And here we've got a sell setup and a sell trigger, and it touches the DMA. That's when I take profit. The trick is to stay long that entire time, to trust it. I say over and over again, I say while I'm trading, I say, trust the process, trust the analysis. Come on. And here is the other corollary to that, level 3. If purple is on top and we have a negative slope, stay short until the DMA, the purple line, is penetrated. And here's what that looks like. Purple's on top. We're going down at a negative slope, down, down, down. And here we touch the DMA flat and get out. Stocks and Commodities Magazine publishes a trading liquidity futures chart every month in the back of its magazine, well, back 3 or 4 pages. And the E-mini is always on top. It's always the most liquid contract. So that's why I trade that one. That's where the money is. You can see as you go down the line, look at some bonds, look at some more bonds, look at the NASDAQ. So the NASDAQ's down here. A lot of people tell me they like to trade the NASDAQ, but the liquidity is down here. Whereas on the E-mini, the liquidity goes off the page. So when we look at PHW on radar screen, I want to look which symbol has the most potential. So there we've got a radar screen from TradeStation. We've got the E-mini, crude, and gold. And you can see that the E-mini has the most potential hourly wage, PHW. Crude has the least potential, and gold has the second highest potential. The free pass, I've got a question in the chat. Is the free pass once a week? The free pass is for 2 sessions, 2 weekly sessions. So back to this. Of course, the one with the most profit, that's the one I trade, and that's the ES. There's only one reason to trade, and that's to make money. I do get asked these questions from time to time. Why do I sell my indicators? Well, I don't want to hog them for myself. They're so profitable. I really like to have people have access to them. And they're not cheap. I'm not giving away something that works cheaply. So it's an investment, but most people who buy them tell me they make up the money in the first 2 weeks. Why do I do consulting? Because I love to talk to people. I love to talk to traders that are learning. And I get a lot of people who've dug a hole for themselves and want me to help them get out of it, which I can do, but it's better if you call me early, like before you dig the hole. And why do I still trade after 44 years? I've been asked these things many times. I've been told to retire. So I like to give back to the industry that's been so kind to me. And my good friend Larry Williams once was very generous to me in teaching me as I was beginning 44 years ago. He lived down the street from me. And I looked him up and gave him a call and said, "Can I come talk to you?" And he said, "Sure, come on over." Well, I didn't know at the time that he was a famous trader, and I probably shouldn't call him, but I did it and got to know him. And he was so generous with his time that I feel like doing the same thing, giving back to the industry. And I still enjoy it every day. I'm thrilled to get up and trade the markets. And I still like making money. Nothing wrong with making money, no matter how old you are. So, do we have time? Well, not really. I'm going to real quickly go over the Ultimate F spreadsheet. So, if you have a string of profitable trades, it's possible with strategic compounding to magnify the profits. And I call this my Ultimate F spreadsheet. It's reminiscent of Ralph Vince's Optimal F, but it's not the same. Because we don't have the enormous risk of drawdown that Ralph Vince's Optimal F has. So in 2024, on January 2nd, I started a daily live trading room that I call Trade Along with Sunny. I trade 5 contracts of the S&P. We're together for 1 hour starting at 7:30 a.m. Pacific time, and I trade with double the margin in my account. Currently, the margin is $16,000 for one S&P, so you can do the math, that's 32 grand. And here are the results. We're up 482% in the 51 weeks we traded together, and you saw that already. And here's the Ultimate F. Oh no, this is the Trade Along with Sunny spreadsheet. So you can see this is in the beginning, and I was keeping track of the results. So here's how you make it better than that. This is a chart of 1111, one contract at a time. And here it is compounded. This is the red line. Because yes, it does experience drawdown. If you experience drawdown at this point in the curve, you're going to get a little more drawdown. But we've got $200,000 trading how many contracts the spreadsheet tells you to trade versus trading 111 where you make $50,000. So the potential is monumental. Ralph told me that there were errors in his equations and I found them. And that's why he let me call it Ultimate F. And that's what degrees in mathematics will do for you. We're taught to look for counterexamples all the time. Look for counterexamples. And that's the Ultimate F spreadsheet. You can see it's going 1111 in the beginning. Then it says to put on 2 contracts. Go down a little further, it'll tell you to put on 3 contracts, etc. There's my website, moneymentor.com. My phone number is 760-908-3070. It's right at the top of my website, right by my picture. And all the products I have, I programmed for use in my own trading. I didn't program them to sell to you. I didn't program them to write about in the news. I programmed them for my own trading. And I do make them available to you, and I show you exactly how I use them. We'll have 2 Zoom sessions, one to install the indicators and get you up to speed, and the second one in the live markets. Those are free. I charge $535 an hour for my time, and these 2 hours are free. So make use of them. I don't hold anything back, and I do train you to use them for free. So if you have TradeStation and want to get a free trial, text me free trial, and we'll set you up with that. Free 7-day trial. And I'm going to take a couple of questions and then I'll be done. Options, question mark. Yes, options. You can trade options if you know the direction that the stock's going to go. So if you get a SunnyBands buy signal, you buy calls. Or I'm not an options trader, so I don't know all the terminology about spreads and things. But yes, if you know the direction of the market, it'll sure help you with your options. Anything else? No, I think that's it, David. I don't see any more quotes. I mean, questions.